Hello, everyone. Sorry. Thank you for sticking by, and love to introduce to you my name is Donald Wihardja. I'm from Convergence Ventures. We do a lot of FinTech investment in the last few rounds, but the old hand and the more knowledgeable of FinTech people, I would like to introduce two of my friends here. Nikki from the FinTech Association, and JP Ellis from Compare88, right? I'd like let them do their own introduction to tell you a little bit about themselves.
Just a quick one is I started a payments company 11 years ago named Kartuku. That was how I got involved in the FinTech space. 2 years ago, we started up the FinTech Association. JP's actually helped. We helped round up a few of us, and we grew from initial founding members of 6 members to now over 130 members, 110 FinTech companies, and 20 financial institutions. It sort of gives you an idea of how fast the space is growing. And really our aim on the FinTech Association is just to help drive the regulatory environment to be more, make sure that really industry growth is of the top priority, and to make sure that we can help regulators with best practice tech and know-how to be able to accelerate a lot of the industry developments.
Cool. So I'm JP, and years ago I was in a private equity firm between Singapore and Jakarta with actually Donald. And then around 2013, I just recognized that there was so little innovation in finance online in Indonesia. So I started a company with some co-founders called C88 Financial Technologies. And we own and operate the largest financial marketplaces in each of Indonesia and the Philippines. And these are basically fully transactional licensed financial supermarkets that offer loans, cards, insurance, wealth management, and so on. And as Nikki said, we're kind of co-founders, partners, along with another kind of group in the FinTech Association. So we believe, obviously, financial inclusion, access, these are always buzzwords, clearly, but it can actually create a better country, a better nation.
Thank you. Well, let's quickly begin, especially when we're talking about a new financial era. The biggest story last few 12 to 18 months, of course, been quite a few acquisition, even IPO in the FinTech, especially in the FinTech payment area. So let's begin with payment. We've seen acquisition from Doku, Kudo, and a few other that I can't really name at the moment, but the announcement will be coming out soon. So let me ask, beginning with Nikki here, what do you think about this rise of FinTech payment, interest in FinTech payment? Can you share what's coming in the immediate future and why you see the interest is picking up?
I think the main change is the recent dynamics with the platforms, and as was discussed at the VC panel earlier, a lot of Chinese money coming in, specifically Chinese strategics, investing in platforms, investing in payments, in wallets. So I think that has already created a completely new dynamic in the industry, and is I think has become a little bit more obvious through the series of acquisitions, is definitely polarizing the market. It's polarizing the market. People are picking sides, and it's going to be a very interesting couple of years ahead to see how exciting it gets, because there's definitely no shortage of capital. There's definitely already a very large user bases, quite a wide level of use cases. But I think it's today still very much concentrated on the online, on the ride-hailing space. It'll be interesting to see how it can potentially go into more mainstream payments, specifically in offline and brick and mortar.
Okay. So actually, the most important part about how e-money can be used for digital inclusion is if there are use cases that will trigger people to top up. What you see is, aside from ride-hailing, what can you share about how Indonesian pick up on e-money?
Yeah, I think the main thing is, of course, it's a combination of not only the use case or the breadth of use cases, but the frequency of the use case, and specifically whether or not it's a part of your daily life. So the more touch it has, and this is not true for just Indonesia, you can see some of the biggest prepaid platforms globally were born out of transportation, mass transit specifically, whether it's subways, MRTs, trains, have typically been one of the early areas where prepaid wallets or just prepaid physical cards, stored value cards, come into play. I think that today it's rounding out and being able to incorporate other aspects. Food is obviously a daily use case, whether it's food delivery or for groceries, and beyond that, obviously it depends on the culture, but Indonesians love their movies. Right? They love their digital content, so being able to look at those channels as well is clearly an interesting play.
Okay. JP, you'd like to add a bit about that?
No, I think Nikki's the payment expert, definitely. But no, it's absolutely about frequency, and I would just add that obviously that creates a lot of signals that can then incorporate a more inclusive view as to who the customer is and what their financial needs are. So it's definitely like level one that needs to be solved to unlock a lot more innovation in the financial space.
But I think for it to be really, really inclusive, for it to persuade even the middle class and below on to have e-wallet and to top it up, actually not more than just to have. It's actually have to be more than just online stuff, but it has to have to be offline. Nikki, could you share a bit about what you see coming up as the infrastructure for offline using
Sure.
e-wallet?
I think on the online space, obviously, everyone here believes in that, believes in the mobile space. We are still at a fairly nascent stage in the market. It is still less than 1% of transaction value in Indonesia. So that's the easy stat. So where's the 99%? And the 99% is definitely not only offline in modern retail, but if everyone talks about the opportunity about reaching the unbanked, well, that's a completely different segment once again. The way that the unbanked are buying their food or moving around or using transportation, those use cases, although it's the same concept of use case, the actual acceptance points and merchants and other stakeholders involved are in a completely different realm. So that's where, without that infrastructure, a lot of people think about payments really from the consumer perspective, because that's what we see as consumers. But in fact, the key in payments is always about ubiquity. And if you don't have ubiquity, it really is difficult to convince people to move away from what has been traditionally one of the best payment instruments, which is cash. Right? Cash, I think people discount very easily as being very obsolete. I think cash actually is still a very, very powerful tool, and you need to build this digital infrastructure and build a better use case and build a better user experience in order to be able to win that battle in a sustainable way and actually to get people to convert not only because of a subsidy or an incentive at the first time, but to get them to continue to use it, there has to be a significant value add.
That's true, and kind of a couple days ago, we celebrated a really interesting anniversary, which was the one-year anniversary of India's demonetization. So there's also kind of
you think we should do one of those
there. I'm not saying that, but kind of you could look at that as obviously a helping hand, and I mean that was really a world first. That was a really interesting thing, and we're a year on from it now. And I think kind of in the textbooks, we will always look back at that first year. It's really interesting.
So you see a lot more touch point where digital money can be used offline, aside from just ride sharing. We've seen ride sharing as the first turning point, reason why people, the middle class would use e-money, right? What do you think is the second one?
I mean, food food is definitely the second biggest spend bucket in every consumer's life in terms of disposable income. Obviously, housing, accommodation is number one, then it's transportation, then it comes down to food. And the amount of consumer wallet spend on food, specifically in Indonesia, is actually quite large. And especially in the past 12 months, you've seen quite a significant shift away from buying hard goods and durable goods. I think the consumer packaged good companies are definitely facing some challenging times. But on the flip side, you're starting to see users and consumers, net, they are still spending more. They're spending more on food. They're spending more on F&B. They're spending more on travel specifically. And perhaps some of it is the fact that they're buying stuff outside now internationally as opposed to domestically.
Okay. So let's move on a little bit on the second fintech subject area that's quite growing rapidly, at least from the investment side. The hottest startup investment in the sector in 2017 is FinTech Lending. Right? OJK has reportedly issued 26 peer-to-peer lending digital platform registration and one license so far. So what do you see is the potential for fintech lending in Indonesia and how it can transform digital financial inclusion?
It's an awesome question. I mean, it's massive, right? If you look at like household lending as a percentage of GDP in the U.S., it's like low 20s as a percentage. If you look at it in China, it's like just around 10. If you look at it in Indonesia, it's like very low single digits, and it varies depending if you want to take into account the size or the estimated size of like the gray market or the black lending market. And many of us joke that the hero of the Indonesian economy is actually your friend, the moneylender, right? Because he provides you access and kind of understands you because of proximity and things like that in a way that like a paper-based risk scoring methodology cannot. So actually kind of fintech lenders can go in here and not only kind of is there a triple whammy of the country is young and it's growing, the financial services sector is young and is growing, right, and is not assessing risk in a holistic type of way like they're doing in China and India now. So clearly there's like a textbook kind of execution process to bring that here. And the third one is kind of, as we've all been talking about, is just there's a wealth of data now that you can use to assess who these customers are. And there's obviously ability to pay, there's willingness to pay, there's lifestyle, there's all aspects of all like the footprints that they leave as they interact through the digital world. So all these are incredibly germane. And in this, I would say, Indonesia presents one of the largest markets globally, right? For the factor of, population and kind of where, again, like household lending as a percentage of GDP is.
OJK reported that $74 billion of SME lending is still in the hand of the informal sector, out of 160, I think. That's a significant portion of that.
And what's Indonesian GDP? It's like 985 billion. So that's like a startlingly large percentage, which is going into like a black and gray market. And I'm not villainizing, obviously, the lenders. They're performing an essential service, but that essential service can be performed on a much wider scale, clearly.
We discussed before about how the fintech lending can be a step ladder, can get SME from no-file, as you mentioned it, no-file small, medium enterprises to getting it to a thick-file, bankable small, medium enterprise. Can you share a bit about that?
Yeah, absolutely. So, I mean, there are bureaus and there are, databases and so on, but those assess basically thick-file customers. So people who have a record, they have they've participated in the formalized financial sector. But then along that scale down to like farmer and fisherman, you have thin file and then no file. And kind of the role of a lot of these fintech companies globally and increasingly here will be kind of what's called progressive finance or inclusive finance. And that's using a lot of data points and, starting off somewhat modestly, right? Relatively low loan sizes, relatively higher interest rates, and then, as the word says, progressively getting better and better. And then someone with no file or thick file or somebody who has a thick file but has a poor credit record can then rework themselves back into a place where they're then acceptable to conventional kind of financial institutions who, again, are really assessing that on an extremely binary basis.
On the last 30 seconds I got over here, I'd like to discuss a bit about how risky it is to do all this peer-to-peer lending. Is the technology here yet to do to assess it by data?
I mean, peer-to-peer is a lot like Kleenex, right? A Kleenex is a tissue, but we just call it Kleenex because it's a brand and it was ubiquitous. The reality is P2P is just a placeholder term. If you actually look at them, very few of them are funding 100% of their liabilities or the cash in from selling securities to peers, right? Many of the more successful ones in the world have long-term capital commitments in the wholesale financing market, right? So that's the actual critical piece. The critical piece is the liability input, right? The long-term capital commitment in order to fund a loan book or create structuring and securitization of that loan book. And the second critical piece is, do you actually have a risk model which has a Gini index? So there's a lot of people saying, oh, we have algorithms and this and that. But there's three critical things inside of credit scoring. There's application layer data, so all the bio data, where do they live, where do they work, do they own a home? The regressive data, right? So if you give them a loan, how does it perform? And then there's the world of alt data, which is all of the ride-hailing, dating site, telco, et cetera. And together those can be formed and looked on a regressive basis. You can have a model with a Gini index. And those models are basically irrefutable, right? Like the performance of a stock in a stock market is irrefutable. It cannot be fudged.
Statistically irrefutable.
A Gini index cannot be fudged. It is what it is.
All right. That's all the time I got so far. So I'd like to thank you all again for coming over here, and hopefully you have a successful conference day. Thank you.